welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Miami at Exchange, an ETF experience where we're meeting with the top thought leaders and innovators in the ETF space. Joining me for this segment, we have Jason Bloom, Head of ETF Research over at Invesco, to discuss if we're in a super cycle when it comes to commodities and how investors can get exposure to the space. Jason, it's great to be back on the ground with you. Welcome to Trade Talks.
Yeah, thanks for having me back, Jill.
All right, and what macro factors are impacting commodities, and do you in fact think we're heading into a super cycle?
Yes, we believe that we are in about the second inning, give or take, of the next super cycle. Typically 8 to 10 years is a historical time frame that we've dealt with in past super cycles. It's really being driven by two things. You have a medium to longer term issue with respect to the demand that is growing for industrial metals as a result of decarbonization, right? So, some estimates are that we're going to need 500% up to 1,000% more copper in 2030, for example, than we have on hand today to support, right, this growth in the explosion in electric vehicle manufacturing around the world. You're also going to need a lot of metals just to build out all the wind and solar as we remake the global power grid over the next 10 to 30 years. And so the problem is, though, that you also need an incredible amount of energy to smelt the metals into a usable form. And so you're seeing an increase in the demand for energy as we try to remake the global power grid at the same time. It's sort of like trying to fix an airplane while it's flying, right, so to speak.
That's a great analogy.
Yeah, it's a big challenge. And then at the same time, also a part of the decarbonization agenda is the reduction in the use and production of fossil fuels. But you're seeing an immediate constraint in the supply many years before global demand actually is set to peak. And so we're seeing energy prices rise as supply is constrained as a result of decarbonization, metals prices rising as demand accelerates as a result of decarbonization. And it's all kind of working together in a bit of a vicious cycle. And then, of course, you've got the short-term impact of the war in Ukraine and the impact that's having on the supply of energy and metals. So a little bit more volatility in the market than you would have otherwise expected. But the long-term fundamentals are intact unless the world gives up on decarbonization. We have a high degree of conviction that you're going to see rising prices over the years to come.
Tell us about the Invesco Commodities ETFs and the inflows that you're seeing into the suite.
Yeah, last year was a record year, and we were kind of thinking this year looked good. And of course, we're exceeding last year's pace. So we've seen over $4 billion flow into our commodity ETFs year to date. Which actually eclipsed our entire, flows for the entire year back in 2021. So really two things. One, again, is people are starting to really clue in to the fundamental picture that's rising here that I just described. But also, inflation has been a much bigger problem and a more persistent problem than the Fed and most of the market expected, and commodities have historically been the best portfolio hedge to inflation. And so investors are kind of running to commodities now just to make sure that, if inflation does continue to be a problem, that they've got something in their portfolio that will benefit from that.
And your broad-based commodity ETFs are the ones that are amassing the most inflows?
Yes. For the most part, DBC, PDBC, DBC produces a K1, PDBC produces a 1099, otherwise very similar portfolios, so people can sort of mix and match based on their tax preference. But you get about half energy and about a quarter metals and a quarter ag. Those are, rounded off estimates there. And so it gives you a balanced approach. It is a little bit heavier energy, as I mentioned. Energy tends to give you the highest correlation to inflation. So we like a bit of an overweight to energy versus the other sectors, but you still have enough metals and ag to participate in a meaningful way as those sectors rise.
Jason, appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.